up on YouTube. Someone can check. All right, let's get started. Get through this disclosure and we'll take a look at some of these names that were just put in earnings. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here is the same as it was. I put on a couple of trades that I got stopped out of. We could talk about that. Let's take a look at these earnings reports here real quick. The one that really looks like it's a beat across the board is this Microsoft, but it's not really doing anything on the report. It's kind of trading down a little bit from where it closed. Google looked like a beat across the board except on their cloud revenue. Small miss, it looks like, on the cloud revenue, which I would think would be a big one for them. And then we've got Robinhood getting absolutely trounced. That 36 was the IPO price in Robinhood, right? I think. So interesting to see that just held us some support here on that test. Those Robinhood numbers look awful. Q3 EPS is a huge miss. Sales is a solid miss. Yeah, those Robinhood numbers are not good. Crypto activity declined from highs in the prior quarter, according to Robinhood. Sees year's revenue less than 1.8 billion. Yeah, they've missed on everything. Even the guidance number here. I'm surprised that this thing's not down actually a lot more. Those numbers are abysmal. Not good. Not good for the hood. The hood's suffering. Twitter's numbers also not looking good. Twitter not really doing too much here on it though. Down 2%. I'm not trading any of this stuff right now. I think Microsoft was the best out of them. TXN is also getting smoked. Down 7%. Into some support here. I think Hood's kind of the story of the earnings day today. Even though Microsoft and Google are going to be so much more important for the broader market, Google's holding intact okay so far. Yeah, so we'll see how this affects the market itself tomorrow. So let's talk about this market. So first of all, like Pat was kind of saying before, and we were chatting about, you almost don't know how much the technical candlestick, like today and tomorrow, like kind of this week for the SPYs and the Qs really matter, given the depths of earnings reports that we have from FANG names coming out this week. I mean, the market caps on Google and Microsoft that just reported right now here after hours are just so huge that can move the market and completely change the picture. But with that said, coming into today, we once again identified that the market was extended to the upside. As a matter of fact, we were having a common gap to the upside in a market that just got extended again, really, like after yesterday's close was a little bit extended, plus the gap up this morning made it even more extended. That was further confirmed by a 9 on the DeMark on the daily chart for the SPYs. So that's a sell signal. It's just another technical indicator. Again, as you guys know, I don't just purely buy or sell things because of a technical indicator. It's not enough for me, but they're all extra layers of probability. So when I'm looking at the market here and I'm like, you know what, I think that we're too extended here for me to do much buying. And then I see that there's like a 9 on the DeMarcus on top of it. it's just kind of further confirmation to me that we are too extended to do some buying. And then when I'm doing my gap analysis and I'm able to recognize that today's a common gap to the upside, that's just an additional reason to not do much buying today. And on these types of days, I'm more interested in booking profit on the long swings that I already have. I'm more interested in potentially even putting on some cuter short type trades. I still take those as trades, but they also act to hedge my portfolio if I can time them well. And that actually paid me pretty well early this week when the market was also extended, before we had this 3-4 day, early last week I should say, before we had like the 3-4 day time correction into the end of last week that set us up for yesterday's move. So that's really more of what I'm trying to do in this type of environment, and or focus on stocks that are in play. And so the reason why this is so important, even if you're just a day trader, even if you don't keep positions out overnight at all, it's so important to constantly analyze the big picture of the SPYs, Qs, and IWM. It's why we start every morning meeting this way. It's why we start every afternoon meeting this way. So we start our day or end our day the same way, with an analysis of the big picture of the market, because everything flows from that. And if you look at our call outs today, and honestly, we still kind of, I feel like, called out the right names. So what we're looking at, just going to go to some 5-minute charts, because they all gave great opening moves. We spoke about Apple setting up on its daily chart for continuation through 150. Look at that opening move. It's very nice. We spoke about like this SOX L, these semiconductors possibly giving a move. And I could talk about this. I got stopped out at the low right here. But this was, really relatively strong early on in the day. We talked about General Electric trading it through this space between 107 and 107.50 on its earnings report if it triggers. We talked about CRWD. Had a little bit of news this morning. Has a great looking daily chart bull flag, looking for continuation on that. Also, beautiful opening drive. We spoke about Real here got a upgrade. We spoke about going long initially versus $13.22. And then pretty quickly you're able to raise your stop here. I know we were speaking about it in the VTF in real time when it was at 13.50 as a buy spot here initially versus 13.25. And then pretty quickly you could raise your stop to this low. Same thing. This is a great opening drive move. For people who bought this call out at $13.50, you caught 60 cents off that in a $13 stock. We spoke about Fastly. That was an idea that one of you guys had brought up in the morning meeting today off of this flag and the $50 breakout continuation. Look at this opening drive. Here's another one. You're buying this, you're taking your 60 cents risk on this, whatever it is. You're getting a $2 move here in the first 30 minutes. Now, every single one of those that I called out either closed poorly where you wouldn't want to swing it, and you probably gave back a lot of open profit, or ended up failing entirely. Let's re-go through the list. Fastly ends up failing entirely, right? Breaking the level. Real ends up coming all the way down, breaking that opening low. So basically is a failed trade as well. GE never fully fails, but this is a large pullback here from 111 down to where it consolidated in this 107.50 zone, which is basically the buy point. So even though this one didn't fail, you really can't swing it because you don't have a profit cushion there. CRWD, same thing, not a full failure here. It didn't break the opening low, but you're giving back a lot of open P&L on this thing, and there's no way you can swing it. It's a bad-looking daily candle here. That doesn't confirm anything, so you kind of need to exit that one on the close. Apple triggered through that 150, came right back below it, closed weak. This is basically a failed trade also. So why is it that the last couple of weeks, all of these same call-outs didn't just work, but they worked really well and typically were closing well and closing in our favor, and today none of them did? And the answer is because of the big picture of the market. It's all because of the big picture. It's why the big picture is so important. So that's really the theme of today's trading session. what we identified in the morning meeting today was all these factors and why you really shouldn't be buying stock. So, I like to think that when the market's telling me that, though, I still can buy stock, specifically in names that are not going to be as correlated to the market, like a GE, because it's trading on an earnings report. But, you can see here that even if you're trading something that had an upgrade or had an earnings report or whatever it is, if the market's going against you, you are still fighting the market. It's still going to be an easier trade if the market's going to be on your side. So this is why we have to start with the big picture, work our way down to the small picture. The big picture told us today, and this was the game plan that we had in the morning meeting, it told us to not be aggressive, to not be adding a lot of longs. It told us that you should be patting yourself on the back for all the successful buying that you did over the course of the last 2 weeks and booking profit off of it and possibly trying to short. The frustration, and I could talk about this because I was frustrated today, and I know a couple of you guys probably were as well. The frustration was, even if you're looking at the small picture here, with all the things that we identified, this common gap to the upside, common gaps tend to get filled, the degree of extension on the daily chart, the degree of extension on the small time frame. This market was so strong in the beginning of the day and topped out here for the SPYs at 1020. The Qs made a slightly higher high here above this 1020 high to stop me out. I was focused on trading the TQQQ today off of the Qs, and I got stopped out with a little bit of slippage. My price on my stop was 151.19. 151.19. That is the absolute high. And honestly, if I wasn't in the Qs, because the Qs, as you can see, made this slightly higher high right here, whereas the SPYs actually made a little bit of a lower high at the same time. If I was in, one of the other indices, I guess not the IWM. So I kind of thought with what the TLT was doing with this pullback that I might see a flip on relative strength, because the Qs are relatively strong off the open. And I thought with what the TLT was doing, I could see a flip there where the IWM takes that relative strength and the Qs don't. But this little higher high here, just by a couple of pennies, stopped me out at the high of the day. And then that was it, right? And I knew it too. I was even saying it out loud. I was like, I think I got off the radio right after I got stopped at a TQQQ. Is I think when I got off the radio, because I had a little 11 o'clock meeting today. And right before I jumped into my meeting, I turned around to Pat and I was like, I'm pretty sure I just got out at the high of the day. And it is what it is. I didn't take the reshort. It stinks. I had a solid heavy position on it too, just because of all the things that we're talking about. Oh, and the other confirmation was the VXX. Talking about all these confirmation points, right? The degree of extension, the DeMark indicator, multiple time frames. This VXX went positive. Look at the move here in VXX in the beginning of the day with the market. The VXX is going straight up, and the market's going straight up at the same time. That's an anomaly, and that anomaly can last. We've seen that anomaly last on certain occasions for days, but it's definitely a warning sign. And you can see here, look at this VXX rip here at 10:30, and I was just like, oh my God, this market is gonna go down. It's gonna go down. It's gonna go down. And I was getting heavy and heavy and heavy, and then, maybe that was part of my problem, was I was too heavy. So I really needed to manage the risk on that. And unfortunately, when this high broke, that was when I got stopped out for the second time. That was actually the second stop out I had in the TQQQs. So, for me today, it was definitely a little bit of a frustrating day. I was able to book some profit on some of my long swings into that up move, but as far as getting that short trade on, all I did was actually lose money on it, and then the market rolled over. So I got stopped out at the absolute high of the TQQQ for a nice loss, and I also got stopped out at basically this absolute low of this pivot point on the SOXL here that I was long. And then it gave a strong enough of a bounce where I would have made money in this thing no matter what. Luckily, I was able to manage the risk well, where this turned out this was a very small loss for me. But I think it's worth noting that getting stopped out at absolute lows or absolute highs or things like that, it happens to everybody from time to time. It's like I said, I think in yesterday's afternoon meeting, the most important thing you can do is really make sure that you're checking your process. If the process is correct, the result is not as important. And I do think for the most part, my process today on these trades was correct. And it's just unfortunate, kind of what happened with this TQQ for me to be the high print of the day. It's also worth noting from a psychological trading aspect, and I was definitely frustrated today, and I know myself well enough to be able to recognize that I was getting frustrated, and take a half step back a little bit because of it. So today I got stopped out at the absolute high of the TQQ. I got stopped out at the pivot low of the SOXL. But it's also worth noting when the opposite happens, when you don't get stopped out by a penny. I remember just like a week ago when I was short Apple that I didn't get stopped out by literally 1 penny. So it's worth noting both sides. You don't want to get yourself all crazy like, oh, they know where my stops are, because it's not true. Even if they did, they don't care. They don't care about you individually. They don't care about your stops individually. What they do have, what definitely exists in the market, and I could talk about it at some point, there's definitely algorithms that exist that are designed to try to measure where they expect a lot of stops are, and then it just becomes a math equation for them. If it takes a certain amount of capital, certain amount of buying power to move a stock or move a market to a spot where they think that there are a lot of stops, it's just a math problem. How much capital do we think it would take our algorithm to move this stock to where we think the most amount of stops are, so that we can then come in on the other side and take that stock away from people and then have the real move come in? So that's definitely something that exists. But as far as getting in your own head, because I've seen people do this, I don't do this, but I could easily see how someone could look at this TQQ stop out that I had today at literally the high of the day and say, oh my God, they knew my stop was there and they drove me out. Like that's kind of nonsense. But those algorithms do exist kind of in general that are stop finding algorithms. They don't know your stop, but they are trying to hone in on where the most amount of them actually are and exist in the marketplace. So I think it's a worthwhile psychological exercise, and I always really try to do this to recognize when you don't get stopped out of something by a penny or 2 pennies. And that's why I specifically remember just last week I was short Apple, and it literally didn't stop me out by 1 penny, and then my trade worked and I was able to get paid. And then today it was the opposite. I literally got stopped out by 1 penny, and then the trade worked. So, can't let something like that get in my head. It just is what it is. It's about the process. And today was definitely a difficult day. I know some of you guys, one of you specifically, who's a great trader, so don't let it, bother you, got a little bit hurt shorting Tesla today. I understand the trade. This degree of extension here in the market for Tesla at highs is absurd. But you want to wait for a signal. And part of the problem with today, when I look at the SPYs, when I look at Tesla, is that there was no real signal, as far as I'm concerned, that was like, all right, that was it. That was the high. I know we do have a little bit of a doji here in the SPYs, and I noted this doji when it came in. Like I said, it came in at 1020. I was like, we got a little bit of a doji there. Not sure if it's enough. It certainly doesn't look like any sort of upside capitulation. And then if you look at Tesla's high of the day is actually on low volume. This candle here is, pretty low volume on that high. So trying to capture this Tesla high exactly is very difficult. And look, trading counter trend is difficult, because even if you recognize all the things that I'm talking about why this market should pull back, the VIX, the DeMark indicator, the blah, 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 the extension, right? So many things. Even if you are able to recognize that, the execution of counter trend trading is very difficult. And that's also something you got to remember. For the most part, you really want to wait for that signal to come. And guess what? Sometimes that signal doesn't come. In Tesla today, you're looking at this 5-minute chart or a 15-minute chart. There's no signal here that this was the high. It just went up, and it stopped going up, and then it started going down, and then volume did increase on the way down. Like, you probably could have looked at this in hindsight when this thing was getting below, 1063 or so, and that volume was coming in and go, oh, now it peaked. But at this point, are you going to short, 1060 versus 1094 in Tesla for that move? Yeah, you could. I mean, the risk reward is certainly there. Tesla could pull back to 975 and still be healthy. But I definitely don't think that they made that trade easy. I think that the easy money right now was still just to have long swings on, book a little bit of profit on those long swings because of the market extension, everything we spoke about, and then basically go for a walk. That was the only easy money today. The only easy money today, I think, was money that you made for yourself over the course of the last 9 trading sessions that you are just realizing and putting into your pocket for the first time today. So definitely tough, but again, it's just so important to recognize that this is why the big picture is so important. It's one of my overall themes for successful trading, is recognizing what type of day today is most likely going to be, and recognizing the big picture and kind of taking your cues from it. So that is all I got. That is all I got. And I'm happy to take a look at anything that you guys want to look at. What's AMD doing? Did AMD report, or it's not even trading? It did? I didn't see the numbers. Oh, there's the numbers. AMD third quarter EPS is a beat. Revenue is a beat. Guidance is a beat. AMD numbers look solid. AMD numbers and Microsoft numbers, peripherally here, look the best to me of these different reports. And AMD's not even really trading up on it, but that's because of the degree of the move into the report. Remember this last earnings report here? The number came out and then this happened. It's almost like this time the same thing happened and then the number came out. So I think it's even though those numbers look solid, I think it's going to be tough to expect a lot of AMD upside given the move that it had into the report, but we'll see. First thing here, seeing is from Steve. Can you look at MP? It's a rare earth play. Oof. It's a rare earth play. Thinking this is a good play as it's oversold. Also backed by the government. Only domestic rare earth. I have no opinion on this. This is down in earnings, I assume. Why is it down 12.5%? What'd you say? Pat says there was a short report on MP that came out today and brought it down 12.5%. So, I mean, and it's honestly not too extended to the downside because of the up move that it had coming into this. You know, if this thing was down at $29 right now where there's support, I would say, all right, it's extended support. Maybe you could look at it. So I don't have an opinion on this. It's not extended to the downside here at 33.30 as far as I'm concerned. And I don't know the information from the short report. So I would definitely say if you're thinking about getting involved in this MP, you should do your research and look into whatever came out on that short report. Charlie asking about Apple. So I talked about Apple already. You know, Apple 150 here is a little bit of a daily level. I definitely like the pattern that's coming into it. I did mention in the morning meeting today that even though I liked what Apple looked like coming into today, that you're probably better off just at this point waiting for the earnings report to come out on Thursday. But from a trading perspective, I was like, maybe you could still take this as a day trade through 150 if it's triggering. And it triggered on fantastic volume. So hopefully, I mean, look, not hopefully. If you executed well, this move is big enough where you shouldn't have lost money at it. And by the way, all those stocks I spoke about already that we called out in the morning meeting that gave great opening drive trades and then either failed entirely after that or gave at least very large pullbacks, GE, CRWD, Real, Fastly, Apple, every single one of them, if you executed well, you shouldn't have lost money in it. And I think that's really important. If you executed well and you had a good game plan, you should not have lost money in any of those opening drive long trades. You just didn't get paid on them in a bigger way because they all rolled over because the market was against you, which is what we expected today. So, you know, Apple here through 150, you know, you got risk here of 35 cents down to the ignition bar low. It gives a move of, you know, 84 cents. So more than enough to at least cover your risk before you get stopped out. Next year from DJ, along with the big picture of the SPY, often will you also look at an overarching sector of stocks like Apple versus the XLK? Is that something that you always check, keep an eye on, or only in certain circumstances? Yeah, for sure, DJ. The market is first and foremost, but I'm constantly looking at all of the sector ETFs. I also want to pay attention to all the sector ETFs. I want to know where the relative strength is and where the relative weakness is. And then I also want to know, even within sectors, what stocks are relatively weak and relatively strong in the sectors themselves. So yeah, I've been sharing my screen a lot, especially early on in the day through the VTF, and I personally actually don't think that's necessary at all, because you guys all have all of your own charting software, and we're speaking and typing. So what you guys should do is what I do, which is every single time someone mentions a name in the VTF, you should type it up and look at it, because you never know what type of opportunity is going to be there in front of you. And what you might notice, if you ever do watch my screen when I'm sharing it, is how rapidly the symbols change. It's constantly different symbols that are that I'm scrolling through, and I'm looking at the SPYs, and obviously I'm just showing the one screen. I've got other charts and other screens here as well. I'm always looking at the SPYs. I'm looking at the Qs. I'm looking at the IWM. I'm typing up the different sectors. I'm typing up all the stocks I'm involved in. I'm typing up all the stocks that are on my watch list for the day. I'm typing up all the stocks that are just important to me in general, even if I'm not in them. It's a constant scroll through of symbols to get those constant, snapshots of where everything is, and that's all information that I'm absorbing into my brain that's going to have an effect on the probability of any trades that I actually take. So yeah, for sure, DJ. Next here from Jared. Would you mind reviewing a trade that I had? Absolutely, Jared. All right. So AMD right off the open, it had a bull flag on the first 3 5-minute bars. Okay, so we know that AMD has been broadly trending higher. The first bar of the day here is a really strong Maribozu type candle on good volume. It's the opening candle of the day, so there's always higher volume on the opening candle of the day, but you can see, even compared to like yesterday's opening candle, that this is pretty good volume. That's what you want to see. And then it kind of gives a descending bull flag, so it's like a descending channel bull flag. A descending channel bull flag is both a time correction and a price correction. So it basically is moving sideways here, 2 inside bars in a row, but also pulls back a little bit on the third bar into the 80MA. And we know that when you're looking at flag patterns, when the 80MA catches up to the base of the flag is usually when you get upside continuation. And you would want to be executing this because it's a descending channel on the break of the channel, which would really just be the break of the last candle. So you could be buying this flag for a continuation here through like 124.80 is one way you could execute it, versus this low, which is 123.65. So that is $1 plus worth of risk, $1.15 of risk. So it's a decent amount of risk on that if you executed it that way. That's how I would execute it. But I might not have executed it at all, just because that, I don't know if I want to risk over $1 in it. But anyway, let me continue to read your question. You had your stop under the second bar low, okay? So I already see the problem there. You got stopped out under 124. Your entry was at 124.40. You got in before the third red bar. Should I have been risking versus the low of the day, or should I not have been in at all due to the extension? Cool. Yeah. So a few things here. I'll tell you why I wouldn't have traded this at all, because it had earnings after the close and because it was already extended on the daily chart. So for me, that is more than enough to not take it at all. So that would be the first thing. Second thing, though, is we can still analyze the specifics of the entry execution of your trade to help us with improving as well. So the big thing here is, and I've been speaking about this a lot recently in meetings, and usually not with like a bull flag type pattern. Usually we've been speaking about it more with breakaway gaps. We spoke about it with, and breakouts in general. If the 80MA on the time frame in which you're trading has not caught up to your stop loss, you have a significantly higher probability of getting shaken out of the trade and the trade still working. That applies for this pattern in the exact same way it applies when I was talking about this on a breakaway gap just a couple of days ago in an afternoon meeting. And on top of that, we know what I just said earlier, which is bull flags typically continue when the ADMA catches up to the base. So I would say a couple of things here. One is you started a little bit early, and that's not necessarily terrible, but I think it's difficult when you don't have the ADMA catching up to your low yet to really utilize that low as a stop. But you did have these 2 inside bars in a row here, so I understand why you would cheat. And the other thing you want to recognize is that so when you're executing a bull flag, and let's pretend for a second that this is a symmetrical bull flag and not a descending bull flag, because the descending bull flag actually makes it even a little bit trickier. Let's say you had a perfect sideways bull flag here. There's 2 ways in which you can execute it. One is you can execute within the pattern itself using whatever the low is so far up until that point. Ideally, your ADMA is caught up, though, so you're lowering the probability of a shakeout. Or 2 is you wait for confirmation. And that means that it's breaking out of the pattern, you're buying the momentum, and you're giving it to that same stop loss. The first way of entry, where you're entering within the pattern, is going to have a lower probability of success but a better risk reward. The second way of entry, which is buying the momentum, the break of the pattern, is going to have a worse risk reward but a higher probability of success because you have confirmation. So there's a trade-off there between risk reward and probability of success, as there often is with a lot of trades on your execution. But the biggest thing to me is I just think that you are early. If I was looking at this pattern, I wouldn't buy within the pattern. I would only buy the break of the pattern, that second entry execution that we spoke about, if the ADMA hadn't caught up yet. And I'll tell you why. When the ADMA hasn't caught up to your stop loss, we know that there is a higher probability of getting shaken out of a trade. But when the ADMA hasn't caught up to your stop loss, it also means that you are relying purely on momentum to pay you on the trade. So if you're buying highs on the break of this, well, at least you got the momentum, right? At least you know the momentum is there. So all right, the momentum is here. My stop loss is a little high, but at least I'm riding this wave of momentum, so hopefully the momentum itself is enough to pay me, and the ADMA catches up, and then my stop loss becomes a good stop. What you did was kind of this in-between where, the ADMA hadn't caught up yet, but you also didn't have confirmation of momentum. So you really kind of need to have one or the other kind of coming into play there. So that's my feedback to you on this trade. And, Jared, this is a great question. And to the team here generally, don't be afraid to ask questions like the one that Jared just asked, where he's asking about the specifics of a trade that he took and the execution that he took, because this was a great opportunity for us to do a little lesson here on how markets work, how momentum works, how extension works, and how specifically how a flag pattern works and the specifics of the execution on a flag pattern. And hopefully everyone can benefit from this in future situations that are similar. So great question there, Jared, and I really hope that helps. Next from Michael, giving me a compliment. I appreciate that. And asking, is the IWM setting up for a sell-off? Let's take a closer look here at the IWM. So I think it's very difficult to say that. It's very difficult to come in and predict that the IWM is going to be selling off. Now, we have seen the IWM start acting more relatively weak to the NASDAQ a lot more regularly recently. If you guys remember, starting in mid-August here and throughout the September correction for the market, the IWM was actually relatively strong compared to the SPYs and the Qs. And then it's been more recently in this rally here in the second half of October that's been once again really led by NASDAQ. SPYs have been very strong, and the IWM hasn't performed as well. So on the one hand, you do have some relative weakness from the Russell here. But on the other hand, even with the pullback in the market today, it was a pullback that we expected because the market was extended. And still at these price levels, all three of our indices are still in what I would consider to be bullish territory. The IWM hasn't even pulled all the way back to the ADMA on the daily chart. It just broke out of some tasty levels recently. I think it's way too early to try to predict that the IWM is toast here. We'll take that day by day. Based on everything that the market says right now, what I think that we can look for is maybe a little bit of a deeper pullback in our indices because of the degree of extension coming into today, because of the DeMark indicator, because of how we closed today. I think that we can look for a little bit of a deeper pullback in our indices, but by no means do I see at this point signs of the market reversing entirely and going back to neutral or bearish territory. So we'll take that day by day. Ryan reminding us that Tesla got a $4 billion deal with Hertz yesterday. Yeah, definitely a tough one, but the degree of extension there was huge, and that news was from yesterday morning. Ben asking, where would you short Twitter? Yeah, those Twitter numbers didn't look good. I'd be curious to know how much of it is priced in, though. This is our third social media here that's missing numbers after Snap and Facebook. So I would assume that some of that's priced into the stock at this point. And I can see here the stock is actually trading decently well, is what it looks like. If it's trading at 63.50, maybe I'm missing something in the earnings report or something that came out later that's actually a little bit more bullish than what I thought that report initially looked like. This Twitter has been in a big range for a long time, which is making it difficult to trade. You have support at 58, you have support at 60, so you could look at those areas if it's breaking down for a short, if that's what you're looking for. I don't think I'd be hitting the short button right now at 163.60 when it's in the middle of the consolidation. Another follow-up question on the IWM here from Sunny. Could the IWM candle today be an RDR? I would not consider this to be an RDR. An RDR would require really like 3 up days in a row. You can see here that just the day before yesterday was like kind of a negative candle. If you're looking at for like an RDR type situation, you want to see like 3 or more candles up in a row and then a push through failure. And yeah, today was maybe a push through failure in the Russell, but I don't think we had the degree. Part of the reason of the red dog reversal that he has that trade is you got to keep in mind that if you have this stock which just went 3-4 days in a direction and now it breaks that high or breaks that low and comes back the other way, that stock is going to be inherently extended. And it's one of the things I don't know if Scott goes over in detail too often when he explains the RDR situation. That when you have it, you have an inherent degree of large extension. And, you had some extension in the IWM today, but it wasn't like it had 3 huge days in a row and then a push through failure. So I don't know if I would bite into that. And again, we here secretly in the pro desk want to call the RDR the red dog retracement. Or maybe we want to call it the Oldensmith overthrow. Great job on CLF there, Gabriel. That was a fantastic 3-day trade for the team. I know a bunch of you guys got book profit or even got out of it today, so great job. Yeah, AMD's numbers look great, but it had a huge move into it, so I think it's hard to have conviction to kind of buy off that. DJ here, just wanted to ask about interpreting Pat's note and about sweeps, or Pat's post about sweeps. How should I interpret those? Sure, great question here, DJ. So one of several things that makes Pat so great, not only is he young and handsome and currently has a lovely lady friend up in the Massachusetts area that he's been running away to on the weekends. Not only is Pat all of these great things, but he also provides us a lot of really good information here in the VTF. And one of those really important pieces of information is that he is providing us information on large order option flow. So large order option flow is primarily going to be institutionally based because of how big it is, and it has an effect on the market. You can have, what's called like a gamma squeeze if enough comes in. Basically what happens is, with the option flow, and there's more option activity in the market in the last year or two than there basically, I think, ever has been in the history of option trading. It's obviously become very popular amongst retail people as well, Robinhood folks, etc. So what ends up happening here is options are also kind of naturally levered bets, right? And the people who are on the other side of those trades, the market makers who are on the other side of those large option orders that are going into the market, they're not in the business of taking a risk. So what they're doing is, when you see like one of those big call sweeps that are coming through, like that bullish action coming through, you have a big option buyer. So obviously you have an option seller on the other side of the trade, who's usually going to be a market maker. And And then what that market maker is usually doing is they're coming in and then buying the underlying stock to hedge themselves out. So when that happens, that all can make the stock move in that direction in a big way. Now, what I'm not doing, what I'm very rarely doing, if I want to be totally honest with you guys, is seeing Pat post option flow and closing my eyes and buying the stock. I'm not really doing that. The way that I utilize it, the way I think we as a team should utilize this important information is as another layer of probability. Tesla yesterday, in Tesla's move, the flow was hitting starting right from the beginning of the day, and it was just constant. Tesla bullish action, Tesla bullish action, Tesla bullish action. You don't want to be short Tesla or any stock when you're just seeing that degree of option action coming in against you over and over and over and over and over and over again. So it's an added layer of probability on the trades that you're taking. Same way, like when we're analyzing the market, we're analyzing all of these layers of probability. At the end of the day, it's all about, trading is 100% about probability, because any stock or any market can move any direction at any time. You might think it's up too much, it keeps going up. It's down too much, it keeps going down. It should go up, it goes sideways, right? Like everything is in probability. What you need to do is, when you're looking at a market or a stock, is not say it has to go up or it has to go down. The question that you're asking yourself truly is, what is the probability of it going up from here? What is the probability of it going down from here? Because the answer is never 100%. There is no such thing as 100% in trading, except for buying WeWork at $10. Anyway, just kidding on that. So the option flow is just an extra one of those layers of probability. Like, why didn't we like buying the SPYs today? We didn't like buying the SPYs today because it's extended. That's a layer of probability against continuation. The mark indicator, it's a layer of probability against continuation. The VXX, what the VIX was doing, it was a layer of probability against continuation. All of those things made it that way. So when you're analyzing any stock, any trade, and you're seeing that option flow come in, it means you're going to have a higher probability of success on that trade. That's why I love when I can analyze a stock that's got a beautiful daily chart pattern, and then it also has news that day, or it has extra volume that day, or it has option flow coming in that day, because it means that the trade that I'm looking at is now going to have a higher probability of success. So that is the answer to your question, DJ. CRTX is making a move. Dead. Off of biotech. It's a biotech name. Down 72% here. They did not meet their endpoints in their phase 2-3 trial, gain trial. Yeah. And then Ariel here saying this is why you don't buy biotechs. And I agree with that 100%. I do not like swinging biotech stocks ever. It's always the biotech stock that you see down 71% or up 400%. As much as I would love to wake up one day and have a stock 400% in my favor, it's never happened to me. Or 100% or 50% for that matter. I've never gotten a gap like that in my favor in my entire career. I do not want to come in one day and see a stock gapping 90% against me, because it could end my career. No problem. Charlie, next here from Zahor. Where or which tools do you see ETF versus constituents side by side? I don't. So you could build in a watch lists into your trading software here, Lightspeed, and you could have XLF, and then you could have the underlyings of it in it, you could have XLE, and you could have the underlyings of it in it, or at least the major constituents, and then you could get like one quick snapshot on it. That's something that the software definitely has the capability of doing. I don't do it that way. For me, I'm just typing up the stocks. I'm sitting here and I'm constantly typing up XLF. All right, there's some strength. What about the JP Morgan we were talking about? All right, that one's a little bit weaker. Just the ones that are of my interest. All right, we're taking a look at the XLE. Oh wow, that Oxy was really strong. Oh wow, Exxon gave great strength today. That's kind of how I'm doing it. But you could also easily do it with a watch list. It probably is better to do it with a watch list than the way that I do it. I'm just kind of sometimes stubborn in my ways. Sunny's saying, unrelated topic, but how do you set alerts in Sterling? Are you on Lightspeed? Sterling LST? Sterling LST we refer to as Lightspeed because there's also Sterling Trader Pro, which is STP. If you're on Lightspeed, which is what I am on, you just click on your market maker, and it's programmed into your system, so it's hotkeys. So, but it should be, for me, if I hold Control and press A, then this alert box comes up. And if I wanted to know, when this thing is going to be approaching $17, I might put an alert out at $17.20. Once I press this little arrow, it's in the system. And then, here I can set an alert out basically at this price. So you can see what the alerts look like. Whoops. Or can I? 18 dot, and now it's moving on me. 18.80. Bam. And you can see right here my alert just went off. So alerts are very useful for your trading, especially if you have a big watch list of names for that day. You want to get your alerts out when they're approaching the levels that you want to pay attention to so that you can type them up pretty quickly. I know Sterling Trader Pro can also put alerts in, but I can't tell you the functionality on doing that. But if you reach out to Pat, I'm sure Pat can help. Holden saying he came across BSY today when he was doing some research. It's a civil engineering software company that might be nice to trade around the infrastructure bill news. Okay, thanks for the information on your research there. We can keep an eye on it for sure. See if it wakes up. I think someone asked about this name in the morning meeting today. I think above this, like $60 would be the first spot to be looking at, and then it needs to clear that negative Maribozu high. Intel CEO buys about $500,000 worth of shares in Intel, and that's, I assume, helping it create a little bit of a bid here. Yeah, up small. No problem, Sonny. Next year from our friend Sebastian. Today you bought GE at 107.50. Goodbye. Good price. That was on our game plan for today for a similar price. I gave a nice move, but I gave back so much open P&L. Yep. I thought it was a pullback to the 80 man. I added back. Okay. Adding back and adding are two different things, right? So I'm assuming that you're using that terminology correctly. You added back some of the stock that you sold. But it just continued, and I got stopped out at 107.27. I covered my risk, but ended up making less than 1 on my ratio. Okay, thoughts? Yeah. First of all, great job. Great job doing your research. Great job executing the trade at the right price point, going in along with the ride. It's basically like we spoke about in the morning meeting today. Earlier in the afternoon meeting today, where just a lot of things did not give follow-through specifically because of what the market itself did. So I think great job with the GE here. The only thing that I would say is I don't like the idea of just kind of blindly adding back your position. Make sure that you really have a signal here to actually do it. I say that kind of honestly not fully meaning it now I think about it out loud. It's nice to have a signal, but I will also sometimes just add back methodically. But if you're adding back methodically like that without the real signal, then you have to be very comfortable with the decreased overall reward that you'll get if the trade actually goes down and then totally fails. Which this one, ended up definitely not giving another move. I don't think you did anything wrong here, Sebastian. The stock just didn't give you follow through today, and the market was not on your side. So I actually think you did a great job. So keep it up. From my man Stephen G. down in Miami. I bought Tesla on the opening drive, but did not add on the ensuing dip. What would have been a good dip? I remember you calling that out. You got to be very careful is the first thing I would say, buying a stock that's this extended on the daily chart, especially when we're worried that the market's not going to be on your side. So if you bought this as like an opening drive type of thing here with the volume, or honestly, it might not have been a bad buy on the third candle here versus lows. If you did that and you caught this ride, great job. I don't know if I would look to add this back, though. I don't know if I would look to buy a dip. I mean, if you're looking to buy a dip, your dip buy on this thing is $960, $975. We're somewhere where it's no longer extended on the daily chart, which is all TBD, right? And this candle here on Tesla on the daily chart is very ugly today. Let's see here. From Dustin, please have a look at Soxel. I traded Soxel today. What is the best way to trade 3x bulls? I'm a swing trader, entry at 40.46. Yeah, I mean, you know, you trade leveraged ETFs in the same way that you would trade anything else. The only difference is that you're going to be experiencing more volatility inherently because of the fact that it is a leveraged ETF. So I liked this Soxel today. It was on my radar. I traded it today. I got stopped out of it today. I lost a very small amount on it. If you are a pure swing trader, I mean, the first thing I would say about pure swing trading is if you consider yourself to be a swing trader, I think that you should still consider taking losses intraday. So, like, if you were looking at this Soxel, and there was definitely some things here to like about this morning. Looks good on the daily chart. Inside day here. ADMA is caught up. Breaking the inside day high. You know, so as a swing trader, you could say, I want to buy this above yesterday's high versus yesterday's low, something like that. But if it closes this bad, like it did today, I think you want to hit out of it at the close. I think that's going to manage your risk better on your swing trading. The way that I like to swing trade is to risk money that I've already made in order to make more. So that means if I'm down on a position and I'm keeping it overnight, I'm putting myself potentially in a lose-lose situation. And that is not what I want to be doing as a trader. I want to be putting myself consistently in win-win situations over time. And you don't have a win-win situation when you have a swing position that is against you from the get-go. I think you're better off just exiting that as a loss. Oh, and I just saw here that you said your entry is 40.46. So you're golden. Oh, so you're in from when I got in, probably on this day. This is when I first entered. I first entered this thing, but I took it as a shorter-term trade. I got out into this extension. I was actually looking for a re-entry today. So yeah, I mean, it's the same thing. Like, you should just be trying this on the daily chart. So with your price being as good as it is, I probably would be using a stop loss now, a trailing stop loss based on my rules at 43.30. You, sir, are in a win-win situation as long as it doesn't gap down too big against you. Awesome trade. Next here from Jernej Ravbar. I apologize if I mispronounce your name. And you're pretty much asking about all of the crypto names. So we could take a quick scroll through here. Mara's been the best one. And it looks great. We called out Mara yesterday for an opening buy. So that's a great trade, and now gave an inside rest day today. So Mara looks fantastic. Potential continuation above today's high. Riot, I think, has been the worst one. This name, for whatever reason, has been super relatively weak. There was a breakout day here at $29. It's now back below it. Does not look good. BTBT has been somewhere in the middle. I did not like how this BTBT didn't catch a bigger bid here. When this thing broke 12 here and crypto was performing well, this thing should have gone. And that was your first signal that BTBT was going to have some weakness. So it's still kind of closed above 10 today, so I think it's okay. But I'm not in love with the price action of BTBT. SOS, I don't look at this one as much. It's a little bit too cheap for me. I don't really have too much of an opinion on it. I definitely want to see this continue to hold these lows. This 230 low. Hut is another one that I do look at that I also think has been a strong one. There's no setup at this point, though. If you're not already in it, you need that thing to reset up. And then yeah, Facebook. You know, we spoke about this Facebook yesterday after hours, and again this morning in the morning meeting. I got no feel on this Facebook here. I thought their numbers were terrible, but they padded their numbers by a massive buyback. So, and the other variable in the scenario was how much of Facebook's bad earnings were already priced in because of Snap's bad earnings. So all of that made me had no real feel for this Facebook, and it ended up being weak. It's now below the 200-day. I don't like the company. I do think that the metaverse thing is interesting. If they can execute it right, that could be huge for them. But we're just seeing continuous declining numbers from Facebook now coming in consistently over time. So it hasn't been my least favorite FANG stock for a while, and it still kind of is. So I don't see anything to do here. Is there a scanner in Lightspeed? There are a variety of types of scanners that it has that you can look into. It's really more of a Pat question than mine. But it's got like risers and fallers scanner. It's got like one with volume as well. So it has a few different things that you can build into it. Nothing super advanced, but it's definitely good software. Cool, Sonny, no problem. Are there any videos to watch on adding on? Yeah, so I just filmed, you know, you guys, I hope everyone is been doing me a big favor and has been giving me a subscribe on the Derrick the Trader YouTube here. One of the things that I've been trying to do with this is give a lot of mini lessons in here. And I just filmed one recently about the difference between adding stock and adding back stock. So hopefully that's going to be on here soon. So I don't have a specific class on that, like in my training program or anything like that. But I did do a specific kind of mini lesson on it that should be hitting the Derrick the Trader YouTube at some point soon. I can check with my main man Dylan over here, who has been helping me. He's been doing all this really cool graphic stuff that I have no idea how he does it. That's all been Dylan over here. He's definitely a cool guy. So anyway, hopefully we'll get that on there soon as well. So click this subscribe button on the Derrick the Trader YouTube, guys. Help me out. I appreciate it. Give me some likes, all that cool stuff. And that helps me to make a good argument to T3 that I should continue to make more educational content for you guys, because otherwise they're going to want me to do other stuff. Squid Games. Sure, Steve. Except if I was in Squid Games, I would win. I haven't finished the season yet, so don't give it away. All right, gang. Looks like we got through the question. Thanks, DJ. DJ says he's smashing the subscribe button. Looks like we got through all the questions for today's afternoon meeting. Look, guys, a little bit of a tougher day today, but we just came off of 2 weeks of just one, home run after the next on our trading call-outs. And honestly, we recognized ahead of the time that today was probably going to be a little bit more of a difficult training session. So that is why the big picture is so important. That's the theme of today's afternoon meeting. I'll see everybody tomorrow. You all have a fantastic night.